And we're back here with David. I'm David, and I'm here with Sam, our producer. And we were on the phone yesterday actually talking about some trades and indicators and how Bitcoin was moving. We thought what we were talking about could be really useful for you guys. And it actually, Bitcoin actually played out the way I thought it would somewhat. And I thought it'd be really cool to kind of just show you what's going on. So, Sam, if we can pull up my screen, and we're discussing how I thought this move would play out. And my thing was, I said, um, if this candle, if the next candle can open, or if this one can close above this level here, which was $34,000. So if the 12th candle, the daily, would close above $34,000, I thought we had a really good chance of going green today. This is how I saw it would play out. There's a little bit of long-term support here and a little bit of resistance there. Those are kind of negligible, but it just gives me kind of visual cues to work with. But the reason I thought it might turn around is because we saw, even though this is a wick, see, closes are more significant than wicks. But wicks are still something that tells you, because at some point during the previous day, it traded down this much and was bought back up. And so the previous day on the 11th, the wick came down all the way to tapping 30,000. And then today's wick came a lot higher. So I thought that was a bullish sign. So if we could close higher at 34,000 above this green candle here, my intuition was saying that we're gonna have a very good day today. And so this is how it played out. This is what it was looking like today. This was the candle on the 13th. And yeah, see, yesterday it closed above 34,000 just by 73 bucks on Coinbase. It opened here, traded down a little bit, and it just monster rally in the last hour. Monster rally.
So what were some of the indicators you were looking for that led you to whatever it was you were thinking?
Well, primarily it was just looking at the wicks. This is the volume, the VPVR indicator. I'll discuss these on future episodes, but basically these gaps here, you can kind of consider them magnets. So when a price action drops from up here, I'm starting to look at these gaps and see that these wicks start to fill this gap. So if you see, it just filled that gap perfectly, right? And so it filled that gap already. That was the 11th. And today it came down, but not as hard, right? We tapped about 30,000 at its lowest, and today our lowest is at 32. And so two things I'm looking for is, one, I want to see even wicks. Like most people could care about where the candle closes, but I care about where even the wicks close, or where the wicks hit. So the wicks, we got a higher high, higher low, and then we're right at where this candle, this support resistance level is here. And I'm thinking if we close below that, that's going to look very bearish, because that's going to be 4 straight days of closing lower than these candles. But today, if we close at or around here, that's going to be somewhat bearish to neutral, which is good, so today's candle would be the more important one. But one thing I noticed on the 1 hour chart, all the way back here, and I'm going to use this replay feature in TradingView just to show you. So this was the 11th around noon. So right here would be what I'm looking at if we're looking at 2 days ago at 12 noon. And one of the reasons I was looking at this as being turning around was because this is the RSI, the Relative Strength Index. And what I'm looking for is a divergence. So on the Relative Strength Index, you have a divergence. This was oversold territory, and the purple area is neutral. So the RSI was going from oversold to neutral, while the price action was continuing to go down. So what this is called a divergence. Usually the RSI will follow the price action. See, the price is dropping, the RSI is dropping. But here it's showing, it's one of the many indicators that shows that the selling is starting to lose steam. So once I saw this, I started to pay attention. And if this works right, we can just see how it played out, right? Next hour and the following hours. See, once you have a divergence, it start to go up, right? So but it's not an indicator this is a trend reversal, but it's one of the many signs that possibly we're looking at a trend reversal. So it actually played into these drawings here. I don't know why that didn't delete, but I didn't draw these until this was here. But
Can you tell me what those are though? Like those yellow lines you put in?
Yeah, so these are just basic support resistance lines. I was noticing that there was resistance here, and there's so this was actually I'll just delete it so I show you exactly what I was thinking. Because there's two possible ways to interpret this. I'll delete all these two. There's two possible ways to interpret this. So at this point, it was looking like there was resistance here on the price. And there's two ways to look at this. One, we could look at it as a triangle or a wedge, or you can look at it as a channel, which trades this way. So a channel is price action that changes at around equal distance towards a single direction, whereas a wedge is a wedge. So it'll have defined floors and while forming lower highs. So these are usually formations where they're called consolidations, where the price action is starting to, with the volume is starting to drop, and you're going to get basically a squeeze. Usually about a third of the way down, you're going to get about a squeeze. So it'll break down in either direction, usually to the momentum of the higher time frames, right? But like I said, this is where it gets tricky. If we had 4 straight days of downward movement, the prior momentum would suggest that this would break down to the bottom. However, we have a divergence here. So now I'm thinking in my head, okay, this might be a reversal. So I actually got into a trade, I think around here. I kept watching this thing for a few hours, and I got into a trade around here. Let me move forward a little bit, where it bounced off this price, and here we go. And it broke out. It broke out from this resistance level. So I actually got into a long position here.
So
And
once
this
it
red,
breaks out of that resistance, though, does that is that like a good sign that it's
yeah,
going?
you usually want to see a breakout. Now, there's two things to think about. Like a breakout generally implies that the price action or the selling pressure is done, right? This is all selling pressure. Every time it hits this line, people are selling. Every time it hits this line, people are selling. But once you have a breakout, it means the selling pressure is gone, either because short sellers are done covering or the selling is just exhausted. There's just no more sellers left, right? So that's what I'm looking for. However, there are things to look for in terms of they're called bear traps or bull traps, either way. So this could be a possible bull trap where it's like it teases a breakout, bunch of guys get in and buys, and it just dumps, right? So that's one of the things to look for. And it starts to get a little more complicated. So I'll get into it in future episodes, but just know that that's what I was thinking in my head, that this could be a bull trap, but I wanted to watch it play out. What I wanted to see was a healthy retest of this resistance level. You want to see that previous resistance now become support. And looks like it was coming that way. And you know what? It never happened. It never happened. So I got into that position. I kind of got lucky. It kept testing where I bought in at, and it just started breaking out. Let's see. Yep. Oops. So are we at today now? Yeah, we're at today now. So yeah, it just kept breaking out. So I played this breakout yesterday. Actually, it was on my Instagram. Actually, let me see if I can pull it up. It's pretty funny. I posted about it. So yeah, that was the breakout that I was playing. So you can't hear the volume, but what I was saying is I played this breakout that I thought the buying was exhausted here. So I saw this support line there, and I was waiting for it to break because I took a short position here. And let's watch that play out. So there's my short position, 30 futures contracts, and waiting for the breakdown. And yeah, ended up being like a $40 scalp. And then that was my prediction that if we closed above 35,000 today, 35,490, we're going to go full bullish. Yeah, and so that's what played out today. We closed well above it. We're tapping at 38,000 now. And look, this is the other thing. This is another resistance level, and we are starting to attack it. So if we start getting these hourly candles close above this resistance level, I can guarantee you this short-term pullback on Bitcoin is over. As
How
soon as
did
we get a
you
close here.
figure out that resistance level?
I actually didn't. This is Tone Vase's MRI indicators. It's one of the many indicators. Um, that he actually, so it's the main indicator that he sells. And I took his course a few years back. He used to be a trader for, I think, Morgan Stanley or JP Morgan, one of those guys. But it is formed by looking at these candles here. This was a complete breakdown in price. So what you want to see is a breakdown in price, long wick, reversal candle, and a sell-off. And then so that's where your previous resistance would be. That's how it gets that line. You see where these wicks, these two candles, where their wicks end, and it's the middle part of where these two candles are. So these four candles combined confirm to him on his indicator by his programming that this is a resistance level. You could look at it visually, but if you can just, so that's the great thing about TradingView. If you can do a little bit of coding, you could code these things in, and then you don't even have to draw these lines for yourself anymore. But let me get rid of that. That's no longer useful. Actually, that was kind of useful. That was another indicator of mine that I use. This is a Fibonacci retracement tool. It's probably cleaner if I look at it on the 4-hour. Yeah, so how I used this was I established, maybe even a 12-hour. Yeah, that's cleaner. I established, it's known that but we tapped about 41,000 some odd, right? And so that's a top. And how you use the fib retracement tool is you establish where the previous breakout was. And I think I said it was here. So I considered that the breakout, and I considered that the top. Nope, actually didn't. Here we go. Was it this candle? There we go. That's the candle. This was the last time we broke down, and I considered that a consolidating, a pullback phase. And then we just zoom back up again. And so once I pull the fib retracement tool between the previous low and the current high, then you start to get these levels, the 268, 368, 5, 618, these levels. And about 66%, 67% of the time, a healthy pullback would hit this level, the 618 level. That's why I have this in yellow, so it stands out. And look what happened. We broke down, we pierced through it, but we never closed below it. And we just keep tapping on this level, like every day for 12 hours. So 2 days, 2.5 days in a row, we kept tapping at this level. And then now we're back. We went back up. So this is like one of the things that I'm looking for, right? No one indicator should be looked at as the truth. What you want is a bunch of them to have a confluence of signs that says the same thing. And so here we go. And that's how I said it would play out. Although what I was expecting to happen, though, I wasn't expecting such a green candle. I was expecting us to close around here, where the previous close and the previous high was. And I was expecting us to sell off a little bit and then start pumping back. And that may still happen. It looks like we topped out at 38,177. And I think we're about to lose some steam. Let me look at the RSI. The daily RSI is healthy. The 12-hour is healthy. 4 hours, 1 hour. Actually, we're pretty healthy. We could still pump. It's only the 1 hour I'd say we might suffer a little bit of a pullback around here. And I'm actually expecting a bit of a pullback.
For the RSI, what would be considered like a healthy amount?
Yeah, anywhere within this purple line. This is established by the indicator. So this goes from 30 to 70, I believe. So anywhere between the 30 and 70 range is considered neutral. It doesn't indicate either direction much. What you want to see is like this giant dip into the oversold territory. That's when you want to start looking for reversals. Right, so this is considered oversold. And here we have overbought. Right, so that's what you want to start looking for. And you can chart RSI too. Like I charted a resistance here, right? So actually, this is interesting. Let me expand this. If you look at the RSI here, let me turn this off. So if you look at the RSI here, I drew this resistance level. We kept tapping at it, and finally we broke down. And that was actually the trade that I posted a few days ago. Yeah, so I drew this wedge here, right? Again, it could break out into either direction. But so what you want to do is you want to look for information from the other indicators, right? And so I'm watching this RSI keep tapping this resistance level until it got to about here, right? And then actually, I think what I did was I even drew a support line. I deleted that after a while because so it became useless. But here we go. So that was support, that was resistance. Once it broke support, look what happened exactly at the same time at the price action. There was a wick breaking the support of this price action. And the following wick, this giant red candle down, is where I got into a short position, right? And this buy is not what I consider a real buying, because if you look at the volume, it's quite low. You want to see these kind of green candles, the green volume indicators, right? This is nothing. This is garbage. So even though the price moved a lot, this is not a lot of price action. So I don't feel a lot of conviction in this buying. And what happened? It hit what was previous support. It becomes resistance and just sells off for freaking days. So that's where I entered my short position. Right. So this is why, like, the RSI is it's a pretty important tool. It does get messy though. All right, good. So I'm gonna go. I trade the perpetual. Futures. I'll explain this in a future episode. Actually, we're gonna record the crypto episode soon, so I'm gonna touch on some of this stuff. So this is the futures chart. So you can see that I've got buy orders layered in around this level, which again, I'm gonna pull back on the daily, is right around here. I was originally expecting to pull back to this price point. I'm not going to change my buy levels just because the candle is a lot higher than where I thought it would be. I still think there's a good chance it'll come down. This might even close as a red day on the 13th. This might even close as a red day. We'll go to the next day, it'll be green, and we start working towards a breakout. I'm almost fairly certain I'm 85, 90% certain this is how it'll play out now. Not necessarily this kind of oscillation, but I'm very certain that the sell-off is finished and we're going to start making our way towards the 41,000 level again towards a breakout. But I would think it would be pretty healthy if this candle was closed as a red, but somewhere around this level. So that's 36,000. If this closed around the 36,000 level, we open the next day around 36,000, we just start working our way up slowly. I think that would be the best thing for Bitcoin. If this broke out again and win another rally, I honestly think the next pullback is going to be ridiculous, just absolutely ridiculous. Like, we went from 41 to 30, but next one we might be going into the 20s. So I'd rather see it kind of inch its way up slowly, consolidate throughout the next few days.
What factors do you think would actually cause it to break out and rally like crazy?
That's a very good question. A lot of trading is psychology, and Kalen knows this, and he'll speak on this quite a bit. A lot of this is psychology, right? I don't want to call some people out, but there were a lot of people towards these 2 days messaging me, either telling me they themselves were expecting Bitcoin to hit 20K, because a lot of people were expecting a retest of 20K, and they were also showing me Twitter messages of good TAs, technical analysts, saying that, oh, this is it, we're going to hit 20K, my buy order is at 20K, or my buy order is below 30K, or whatever, right? So what happened was, on its way up, a lot of people, I've been trading this for a while, so I'm not really impressed by a move like this. I like it, but I'm not impressed by it. But a lot of the newer traders, when they see a move like this, they're like, good Lord, right? We did 100%. So we doubled in value, 120%. We doubled in value in the span of 21 days, right? We doubled in value in the span of 21 days. To a lot of people, that's just unreal. Right. So somewhere around this level, when we started getting the 30,000s around the New Year's, psychologically, I know a lot of people start to think, well, maybe it's time to sell. Maybe we need to take some risk off the table. And so I think a lot of people start panicking here and start to sell, which is fine. That's healthy. But I think what tripped them up was their expectation that just because we sold off here and this is a real pullback doesn't mean we're going to retest old highs. Right. But what you want to look for is confirmations, right? If you look at how strong these wicks are, like, yeah, we sold down on this day. We sold down from 40,000 to 34,000. So, there's a 15% drop, and this day was like a 22% drop. This is, to people that aren't used to the market, this could be very scary, right? But look at this. We closed above, long above where the daily low was. Right, the daily close was a lot higher than where the daily low was. What would scare me? That's why January 12th was critical. This day would scare the shit out of me if we closed down here. Yes, we tapped 30,000 again, but God, if we hit 30,000, we close down there, 20,000's definitely next on the list. But we didn't. The wick only hit the intraday high. The only intraday low was only 32,000, and we got bought back up and closed right here. this is when I turned bullish. This was when I turned really bullish, and I was messaging a lot of people, and I was like putting this on Instagram because I'm like, I want people to know that these are things to watch for. And so, but trying to answer the psychological factor is like, yeah, a lot of people sold off here, the chicken profit, whatever. Obviously, a lot of stops got hit. I think on either the 11th or the 12th, Binance was reporting that about 1.3, 1.4, or 1.5 billion long positions were liquidated. So a lot of people's stops got hit, right? But now you got to think about the people who weren't playing the futures, but they were just playing the spot markets. They're just playing with actual Bitcoin, and they sold off here, thinking, "Oh, let's buy and lower," thinking that maybe we're going to hit below 30K, 20, 25, something like down here, and we reversed. Now there's a giant pocket of people who have orders down here who are now watching this in kind of, I know the feeling. They kind of, their stomachs are starting to twist a little bit now. They're asking themselves in their head, did I fuck up? Because the price turned back around, right? So if we start moving, inching closer, higher and higher, just from more and more people starting to think, okay, shit, maybe I need to get back in position because we're moving up again, it becomes an avalanche. The momentum starts to build. And as the price gets higher, the people that want to buy down here starts moving their orders higher, right? All the FOMO buying starts to happen. And then what eventually will likely happen around this resistance level is not only do you have the people who are FOMOing buying this up to try to break resistance, but you also have a lot of people that are caught in shorts. I guarantee you there's people caught in shorts around this level here. And as the price moves against them, let's see, 2, 3, 4, 5, 10, 20%, what is their pain threshold? Right? If you got caught in a short here and the price moves against you 20, 15, 20%, you're going to start covering here. If you don't start covering, you're going to have to start, your account's going to start getting liquidated. And that short squeeze is going to break us out. So it's the combination of FOMO and short squeeze that's going to bring us next to the next level, to 50,000. So it's not that I'm looking at the chart so much as to my estimation of where things are going to go. It's also me looking at the chart and analyzing what's the psychology happening on the other side, right? Because a lot of people are looking at this thing and they're like thinking this is some random thing that just happens. But what you're looking at, it's really a visual representation of psychology playing out right in front of you, right? And it's up to you to kind of read what's going on. And the thing about the markets is that psychology can change on a dime too, right? A piece of news, piece of rumor, anything can just change people's opinions about this asset. But as long as there's no news that's driving the sell-off, there's no news that's driving a buy-up, you're basically just looking at what the other side, what the other person is thinking, right? So and I know for a fact that there are buyers down here, personally. And as this price increases, they're going to have to make a decision. Do I cave and buy, or do I just hold and wait? I don't know what they're going to do, but there's more than a few people in that position right now, right? And one of the confirmations of that is looking at the volume. If our price continues to go up on lower volume, that's very suspect. That actually means a very few shares are trading hands driving the price up. That's weakness. If I see continued lower green volume, lower green bars coming down here, with price action attempting to break out here, I might even start a short. There's no conviction to that buying, right? But if I start to see green volume days increasing slowly, then I know it's legit. That means more and more people, or at least more and more value is changing hands. This is very small amount of value changing hands. So yeah, any more questions?
No, I think that's good. Thank you.
All right. So yeah, that's my prediction for where Bitcoin's going. Quick recap of the markets. I might as well start telling people what I'm holding, because like, why the hell not? I'm obviously Tesla bull. I've got Xpeng. I just bought into Nvidia today. I'm holding Galaxy. Air Canada should actually doesn't have to be there. And I got into a few of these stocks. So this is my watch list. This is my ownership. I'm probably going to talk about this on a later date, but yeah, I think I think we might do a future episode real soon on the basics of TradingView because I think this tool is incredibly important for anybody that wants to even invest. You should understand how to track the investment and how to start just drawing these very basic support resistance lines. Actually, maybe I should just touch on XPeng real quick because that was a really good one. We talked about that the other day. Actually, no, I think this is how the conversation yesterday started. You were asking me where, let me just take this off log, was where to buy in, right? Because originally had XPeng around here and I sold off around $21 around here on, this was the election fear. So I sold off at this thing and it just took off, right? And I decided, obviously I'm not going to chase. So again, what I did was I used the fib retracement tool, took it from the low to the high, and is it a coincidence? We hit the 1618 once again. And so, and this was all the way back here. Once it was past a few days and it was confirmed that this was the top, I drew this fib retracement graph here, and I set my buy orders here. And if you follow me on Instagram, you saw that I bought in right at 38.39, and so yeah, and literally, what did I wait? I waited 35 days, right? A lot of people started buying here, thinking they're going to catch a move up, and they all got caught, and they're all losers. I don't mean they are losers. I mean their positions are losers. And meanwhile, I had the patience to wait until this spot here, and it's up 45%. And I actually took some profit around 51. Yeah, I took some profit right about there, 51. And yeah, so this is really basic stuff, right? You don't have to really get too deep into technical analysis to kind of use this as your way to figure out entries and exits in terms of investments. So yeah, I think maybe the next one we'll do, I'll go through the basics of TradingView because this is a very powerful tool. A lot of brokers will actually have their own charting software. Some of them actually just port TradingView into it, like Binance. The Binance graph here is actually, look, it's actually TradingView. So so rather than get stuck with one broker and one graph, you just join up, save TradingView, and just start graphing here. You can apply this information to all exchanges because you can just pull this data from any exchange that you want, as long as they're available. And you can start with the free version right now and just start tracking. And yeah, I think that's it for today.